Page 52, question bank, problem number 1, 12 marks question. Digvijay, Brijesh and Parakram were partners in a firm sharing profits in the ratio of 2:1. Asset side, you have cash, debtors, stock, building, patents. Patents is an intangible asset. Liabilities side, you have creditors, reserves, and 3 partners' capitals. Next paragraph, Brijesh retired on 31st March 2018 on the following terms. See the balance sheet date also, same 31st March 2018. The adjustment number A, goodwill of the firm was valued at 70,000. You have to underline the word firm. That is all the 3 partners together, goodwill value is 70,000 and was not to appear in the books. That's the same thing. Under AS 26, goodwill will not appear in the books of accounts. Bad debts amounting to 2,000 were to be written off. Bad debts means amount which cannot be received from customers, that is connected to debtors. So 19,000 is the amount, 2,000 cannot be recovered, cannot be received. That is called bad debts. So it has to be shown in the revaluation account debit side. Next, patents were considered as valueless. Valueless means zero. So patents 9,000 asset is there. So 9,000 becomes zero. Patents will be valueless means it should not be shown in the balance sheet again. It has become zero. That's all. Prepare revaluation account, partners capital account and balance sheet of new continuing partners after Brijesh retirement. This is the problem given. So I'll go for this page 52, problem number 1, 12 marks question. First adjustment, goodwill will come in the capital accounts. Adjustment B, bad debts amounting to 2,000 were to be written off. That is connected to debtors as I told. Debtors is 19,000, amount to be received from customers. Out of that, 2,000 will not be received from customers. So reduction in asset. I put it as debtors account itself, or you can put it as bad debts also. Next one, patents were considered valueless. That is, patents is an asset to be made as zero. Again, decrease in value of asset. To patents account, 9,000. So only 2 adjustments connected to this revaluation. I'll go for balancing. Debit is more, credit is less, that is nothing actually. 11,000 will be the balance. So this is debit is more, so it is a revaluation loss. This has to be divided among 3 partners. First one is Digvijay. Let us see the ratio, 2:1. It is going to be 2/5.
$4,400.
Next for Brijesh, same ratio, 2:1 means this also will be 2/5 only, 4,400. Next is Parakram, 11,000 into 1/5. That is 2,200. First adjustment now is the one to be taken. Goodwill of the firm valued at 70,000 and was not to appear in the books. So goodwill of the firm is valued at 70,000. Retiring partner is Brijesh. Can look at this here. Brijesh retired on 31st March 2018. So Brijesh is a second partner. Second partner means 2:2:1. Second is applicable to Brijesh 2/5. So goodwill of the firm valued at 70,000. Retiring partner Brijesh share of goodwill is, out of 70,000, what will be his share? Two by 5. $28,000 to be divided among continuing partners in the ratio, in their ratio, the gain ratio. It is going to be 2:1. How 2:1? You can look at this. Brijesh goes. So Brijesh goes means this 2 is gone. So remaining is Digvijay and Parakram. First person, third person. The first person is 2, last person is 1. So 2:1. So the 2:1 will become 3. So who are the continuing partners? We have to look at it. Digvijay's capital account. $28,000 into 2/3. The third person continuing here is Parakram's capital account. 28,000 into 1/3. 2. Bridges capital account. So Bridges capital account will be 28,000. The 28,000 to be divided here in 2:1. $18,666.66 will come. So that has to be taken as 18,667. 9,333.33. So that will add to 28,000. Remember, being goodwill value to the extent of Brijesh share and written off therein. This is the one to be remembered always. That is continuing partners, capital accounts, debtor to retiring partners. capital account. That is going to be the entry here for goodwill purpose. So let me take here combined partners capital account, starting with the capitals of partners which appears on liabilities side. You can see here 82,000, 60,000, 70,000, 75,500. So 82,000, 60,000 by opening balance brought down. Liability shows credit balance, that is by opening balance brought down. There is the capitals of partners I have taken here to the opposite side. Next, we have to search for reserves. We have a reserves here, 18,500, that to be divided here among the old partners. Reserves amount is 18,500 in 2:2:1 ratio.
$7,400.
Good. 7,400 for Digvijay, 7,400 for Brijesh, and
3,700.
good 3,700 for the Parakram. Then we have to look into a P&L account. We don't have a P&L account on the asset side. We don't have P&L account on the liabilities side. So no need of P&L account. Then next step is revaluation. So revaluation here in this problem, it is loss. You can see by partners capital account, it is there. So this is on the credit side. It has to come to the debit side here.
To revaluation account.
Yeah. To revaluation account. Because it is on the debit side, the credit side, it has to come to the debit side here. Revaluation loss. So we have to take how much? 4,400, 4,400 and 2,200. So this is for revaluation loss. Then comes the next one, the goodwill. Goodwill of the firm 70,000 that we already valued here in the previous one. Continuing partners capital account, debtor to retiring partners capital account. So let me take the values over here. By who are the continuing partners?
Digvijay and Parakram.
Yeah, Digvijay is giving 18,667 to Brijesh, and Parakram will give 9,333 to Brijesh. So this amount again to be debited here to Brijesh capital account. So how much is the amount given by Digvijay? How much is the amount given by Parakram? So it is debit because to be deducted from Digvijay account as well as Parakram account, because they are giving the money to the retiring partner. So they have to take that on the debit side. So this is the entry for goodwill. It appears on both the sides. That means the retiring partner will get the money from other partners. Credit means it is in addition to Bridges account. So as I told earlier, we have to always first close the retiring partner's account. If nothing is specified, it is the money to be transferred to partner's capital account, partner's loan account from the capital. So amount of Bridges credit is more, debit is less. So the remaining balance will go to loan account of Bridges. The balance amount to Bridges loan account. Remember, balance amount. What is the balance amount? 95,400 minus 4,400.
Sir, it will go to the retiring partner's loan account.
Yeah, retiring partners loan account. Correct. So Bridges loan account. No, this is proper. To Bridges loan account. This is proper. 91,000. So from we are closing Bridges capital account and balance will go to Bridges loan account. Bridges loan account 91,000. Then we have to go for balancing other two partners capital.
$78,700.
No, 79,200. Check once.
Sir, it's 79,200.
Yes, yes.
Now balance the remaining partners capital accounts, that will be closing balance for their capitals. Because they are continuing, their capital accounts will be closing balance carried down 66,333. Then for this person 79,200 minus this two.
Sir, 67,667.
67,667. But
Yes, sir.
this is for the two partners, that is Digvijay and Parakram. The closing balance carried down because they will be continuing in the business as partners, and one person will retire. So that person's capital account balance will not be there. That will go to loan account. This is the combined partners capital account. So we have to show Bridges loan account, no need to balance. You can see 91,000 here. It comes to the credit. Bridges capital account 91,000. So in this, no payment is done to the Bridges capital. The entire amount will be transferred or is transferred to loan account of the retiring partner. Coming to the balance sheet, he retired on 31st March 2018. So 31st March 2018, the balance sheet, new balance sheet, cash remains same. $8,000. The next one is debtors. Debtors is 19,000. We have an adjustment here, bad debts 2,000. So that means out of 19,000, 2,000 rupees will not be received by the business. That has to be deducted. Now the new debtors value, good debtors value is 17,000. Next is stock 42,000. Stock no adjustment. Outer column 42,000. Next, buildings 2,07,000. No adjustment. Outer column 2,07,000. Patents 9,000 is there in the balance sheet, but patents were considered as valueless. So no need to show. Entire amount becomes zero. No need to show patents. Next, liabilities side, creditors 49,000. No adjustment. Outer column 49,000. Then reserves 18,500 we have divided. Then the capitals of all the three partners will not come because Brijesh has retired. So we have to write Brijesh loan account. Brijesh loan account is here, 91,000. Next, capitals of both the partners who are continuing. Digvijay and Parakram. We have to see the opening balances. 66,333. 67,666. And we have to check anything left in the revaluation. We have taken bad debts also. We have taken patents useless. We have taken that also. So nothing is left. We can go for balancing the balance sheet and check whether the totals are same or not therein. So check on the liabilities side. Is it the same value or
Yes,
the
sir.
different value?
It's
Same value
tallying, sir.
means the answer is right to some extent. Almost done, but there's a possibility small mistake may be creeped in, but that will ensure at least you're not gone for a major wrong in the problem given therein. This is the problem usually. You have to remember the goodwill part of it. Brijesh is a retiring partner. He will get money from the remaining two partners. So Brijesh is getting here. Then for Digvijay is a loss. Digvijay is giving to Brijesh how much? Parakram is giving to Brijesh how much? So it has to be debited to partners' capital accounts. That will reduce their balance of capital account.